Hello, my name is Mark Anielski. I'm an economist and the author of The Economics of Happiness. I'd like to introduce you today to a concept called the Community Wellbeing Asset Fund for Communities. This new impact investment fund has been developed and designed with a well-being mandate in mind, with my colleague Luke Ekblad, an investment banker originally from New York, based now in Los Angeles. Luke and I have constructed an important new generation of investment fund that's specifically designed to support community asset development. The fund is a new social impact fund with the mission of eliminating things like poverty by providing near interest-free home equity financing, supporting local enterprises that pay living wages, renewing hope, building neighborhood assets, and what I call genuine wealth. The Wellbeing Investment Fund's mission is clear and simple. That is, to put the local financial and other resources to work in building thriving neighborhood assets and local businesses to improve the overall financial, social, and environmental conditions of well-being for a community. It is a cooperative equity fund, which means it's structured as a cooperative investment fund drawing on local investment dollars, such as you and me, combined with the grant funds available from private and public foundations. We expect to attract monies and investments that generally flow out of the community into speculative finances, such as Wall Street and Bay Street in Canada. The goal of the fund is to successfully leverage the highest and best use of the neighborhood's assets, including our own skills and capacities that are often underutilized or undervalued. The mandate of the fund is to deliver the highest well-being return on investment and on these assets. This is what makes it unique in the social impact investment world, because we measure success and progress not only on a financial bottom line, but also on an environmental and social impact attribute. We want to ensure that all households can enjoy a good life, living wages, and be alleviated from the burden of poverty and the burden of interest costs that have such an important negative impact on people's lives and cost of living. In addition, we think that the fund will help deliver a net positive ecological impact by lowering our ecological footprint, by keeping money circulating locally, and in a sense being more efficient at the use of our assets. The fund is based on a unique operating model which I've developed, and it's presented in my book, The Economics of Happiness. I call this model genuine wealth. The word genuine means to live according to our values, to be authentic. And the word wealth comes from the Old English word meaning the conditions of well-being. The genuine wealth model is based on the notion that there are 5 key capital assets found in an enterprise or a community or a nation. First and foremost is human capital. That's people, including our mental, physical, emotional, and even spiritual well-being. When we realize the full potential of our skills and knowledge and capabilities, I believe we can pursue lives of meaning and purpose and happiness. Too many people today find their work uninteresting and feel disengaged with their workplace. In fact, only 13% of Canadian workers feel engaged in their work, and slightly more Americans. Our second form of assets that we're looking at through this fund are social capital. Social capital includes the social networks, relationships, trusts, and a level of engagement that people experience both as neighbors, as customers to local businesses. And relationships are probably the most precious and important of all assets that we have. Trust is a critical piece of a good and successful business, as it is of any happy and vibrant community. The third form of capital is natural capital. This includes land, water, air, and what we call ecosystem services. These natural assets often go unrealized in our accounting systems and even in fact in our lives. We've never thought about the value of a bee or a bird or a tree, really, other than perhaps an aesthetic value. But these natural assets contribute to our economic and personal well-being in ways that go unaccounted for. The fourth form of capital is built capital. That includes everything from machinery, equipment, buildings, and intangible assets like copyrights and patents and ideas and software. All of these amazing built capital assets contribute to our well-being in ways, again, that aren't fully accounted for in our conventional accounting system. The unique part of this capital model is that we're going to be measuring the integration of the different assets and how they contribute to well-being overall. We call this well-being asset management or asset investment decision making, where we will look at the well-being return on assets and a well-being return on investment. One of the greatest burdens on our society and our lives today is the hidden burden of interest costs, which are often completely unaccounted for in our national accounting of GDP or government financing or even in our personal wallet. I've estimated that for every dollar of income earned by Americans, you will pay roughly 35 cents in interest charges on the total amount of debt that is outstanding in society. This is mortgages, business loans, car loans, credit card balances, even government debts. Sadly, a lot of this money is going to waste on interest costs that are unnecessary if we had a different financial system in which banks became potentially public banks and even money becoming a public utility. But that's for another day. What if, imagine, that money that we needed to pay a living wage came from investing in the abundant and hidden assets found in our community? Like an iceberg, many of these assets remain hidden below the surface of the real economy. Where the market economy looks healthy and money's flowing hands and increasing GDP, a lot of these hidden assets remain underutilized or underrealized. There are other aspirations of the fund. One is to attempt to end poverty as we know it. Poverty, by definition, is a lack of income to meet a certain life standard. We believe the fund could help to alleviate poverty by increasing the number of wages or employees and households to generate a living wage through enterprises that in fact are targeted to generate living wages for their owners and therefore for the households. In Cincinnati alone, we estimate 22 out of every 100 households lives below the poverty line, which is roughly $7.20 per hour. Surely we can do better than this, paying higher wages so that people who find themselves in poverty can now enjoy higher levels of income, spending power, and will actually contribute positively to our economy because they have more spending power. Another focus of the fund is to provide investments in affordable housing. Many communities in America and Canada find heritage homes such as this one or this one in a distressed situation, boarded up, full of pigeons, and yet still have good bones and opportunity for families to reoccupy and to refurbish. Working with Habitat for Humanity, we are looking at opportunities to form a joint partnership that Habitat would provide some of its amazing skills and experience in building affordable homes to helping to restore existing housing stock in distressed neighborhoods, particularly in the Rust Belt cities, places like Detroit or Cincinnati. We can employ underskilled workers, unemployed youth, and even former incarcerated people who need a way of integrating back into society and an opportunity to develop and fully develop their skills and become part of the community again. We are looking at a model which will provide interest-free mortgages to low-income households so that they can become debt-free in 10 years or less and also build up genuine equity in an asset in the home that they occupy providing perhaps a lifetime of interest-free living. These are some of the unique options we're looking at for the fund. The fund structure will be comprised of various portfolios. Affordable housing, sustainable neighborhood enterprises, sustainable food production, and sustainable energy are just a few of the well-being impact funds that we will help develop and leverage inside of a well-being investment fund structure. As noted, funds would come from various sources, including grants, funds from existing community foundations, church foundations, or trusts, investors like you and I and neighbors, and provide a fairly healthy return on investment. We expect to target returns of between 5 to 8% on financial capital, while also delivering and demonstrating a well-being impact or well-being ROI from the fund, which I think will attract investors who are interested in a genuine social impact opportunity. We thank you for your attention to this presentation. We look forward to connecting with you. Please contact me at anielski@gmail.com or visit my website anielski.com for more information. I can be reached at 780-964-0090 in Edmonton, Alberta, Canada, and we'd be pleased to talk to you about the opportunities for creating such a well-being fund in your community, including the financing of a feasibility study to examine the pro forma and potential leverage opportunities that may exist in your neighborhood or your community. Thank you.